Investment firm MicrOmega's full-year headline earnings per share have risen by 27% to 16 rand 46 cents. Here to unpack the results for us, here's the company's CEO, Greg Morris. Greg, thanks so much for joining us today. Well, let's get straight into these numbers. Headline earnings per share, as I said, up 27.2% and really pretty much in line with the trading statement that the company released on Friday. So run us through this period that was for the company, the year that was for the company.
Thank you, Alishia. Essentially, we're comfortable with the results and the performance. They had a big knock based on once-off impairments where we discontinued our activities in the automotive sector, which had a tremendous impact on the results. If one sets those aside, our growth would have been more in the line of 60%. And as we position now looking into 2012, 2013, the sector which we had invested heavily into 2007, 2008, being the automotive sector, cost us money in those three subsequent years, is no longer going to be sitting on our balance sheet going into next year. And so we're pretty excited with what we've developed as an aside to that sector, both in the financial services and the IT, as well as the support services, specifically to occupational health and safety.
You're currently looking at a business that has a split of 80% IT and then 20% of finance. Run us through this restructuring and what's actually prompted you to, divest out of that automotive sector and focus on these two sectors specifically. Is it a sign of the times?
Alishia, just to get the split correct, essentially about 40% comes from our occupational health and safety, and 20% comes from our financial services, and the balance comes from IT. And then, of course, we had the automotive on the side. Automotive was driven purely by new car sales statistics and the decline in 2008, and that was the rationale for exiting that particular market.
And now we've got vehicle sales on the uptick, so it's certainly an interesting position that you're finding the company in right now.
Unfortunately, we were in the unique position where our primary tier one manufacturer in the operation, we had to discontinue it in 2009. We had the overhang of that still coming through last year. And to re-enter that particular space, which was the manufacturing of pistons, is not a space one can re-enter. The barriers are significantly higher than they were years ago, and certainly that's not a sector we'd see ourselves going back to, just with the operating spend required. But if one just focuses for a minute on the financial services, the financial services is essentially interdealer brokering services, which we've been providing for the last 10 years. Then, of course, we've got our support services, and that really is the flagship branded business called NOSA, which really dominates the provision of occupational health and safety services in South Africa. It's been going for some 60-odd years now. It was part of, or fell under the auspices of the Department of Labour and was privatised some 5 years ago. And that business has done us very well. It really has put us into a good place from an intermediary service provision point of view.
In fact, just last month, we've had NOSA having been awarded a tender by Transnet Rail and Engineering. So run us through that relationship and what that deal now brings to the table.
Correct. Essentially there what we've done is we've diversified the business from traditional auditing and training services into other activities such as working at heights. And that particular tender was focused at the provision of working at height services. And that's consulting and making sure that the activities taking place at high levels is fully compliant with the legislation and also best practices.
Value of that tender, I mean, it wasn't disclosed at the time that deal was actually struck. Now, post results, are you able to give us any clarity there?
I'm not able to, in the sense it's a phase 1, 2, 3, and that's a request of the client. But really, what it is it's one that takes us into the space, and it is significant for NOSA as a business. So we believe it's the right direction to start taking the business and leverage off the client base that NOSA established. And the working at heights, certainly we're delighted with the Transnet tender. It really takes us into a space and gives us the credibility to leverage that particular opportunity now.
Let's look at another relationship that you've embarked on, because your subsidiary Torito Networks has also signed a partnership deal with Super Group, and we know that Super Group has an extensive supply chain management network in the country. So let's run through that and how you're looking to leverage off Super Group specifically moving forward in this relationship.
Possibly our most exciting business unit is our cloud computing solutions that we've put together the last 5 years. And Super Group is our first key client to sign up, and in fact there's no impact on earnings or no contribution to earnings in 2011 at all off the cloud solutions. And this particular product we've come up with, and Super Group being the first major local blue chip to take it on, is demonstrative of its traction and of its ability to deliver. And so, yes, we see it's going to be a rollout across the entire supergroup of the application. Concurrently that, there are a number of other projects we're working on at the moment.
What kind of pipeline are you looking at in terms of these, a partnership pipeline?
Well, we're not partnering them in a sense of distribution into their procurement cycle. What we're really doing is we're providing them with the service as a user. Our own pipeline, in terms of contracts secured in 2012, we've signed up just on 20 public sector departments with the same product that Supergroup have adopted. And we're doing proof of concepts in a number of multinationals and local companies, specifically on application delivery using the cloud.